The management support. So the management, whenever preparing the budget, so obviously they can predict or forecast or anticipated what kind of activity is going on, providing plan to achieving a objective. So once you set for objective, every department are equally responsible for their respected objective fulfilling. The budgeted performance means what? The performance which is based on the statement only, we are setting a responsibility duty to the individual persons or line managers. Hello everyone, a warm welcome to one and all. I am Natesh, lecturer in commerce with Ashram First Grade College, Mysore, the Temple of Excellence. We are in the Unit 5, Session 1, 4th semester BCom Costing Methods and Technique. The chapter name is Budgeting Control and Standard Costing. And today my agenda, so you will get the meaning of budget control, why the management are using the budget control to take the decisions or going for the plan. So, and you will get to know the meaning and the definitions, okay? And the objective of budgetary control, then essential requirement of budgetary control. So what are the advantages of budgetary control and disadvantages of budgetary control? So moving forward, the first one. So here the term budget appears to have been derived from the French word baguettes, which means a little bag, a container of documents and account. So if you try to, as a person, if they are preparing for themselves, which is related to personal budget. So based on the budget only, they are trying to go for spending. Okay, so how much is income? So how much I want to spend? So like this, the management in the company, there are different departments are working. So we call it as a functional, right? So each and every department, they are preparing themselves to go for, so which is one kind of anticipated. Okay, so the complete documents, what and all is required inputs, how much is cost related to preparing a budget, so what and all the available informations there in the company. So a budget is an accounting plan. So we can call it as based on the time period, based on the functions. Okay, so we are trying to prepare budget just for going for proper plan. So unless you're not depending on the proper plan, so we cannot take any actions, right? So that's what which is related to accounting plan. So it is a formal plan of action expressed in the monetary terms. So which is completely focusing for the monetary aspects. So for example, if you take for the sales budget, okay, or production budget, everything will be measured based on the monetary, okay. So it could be a seen on the statement of expected income and expense under certain anticipated operating conditions. So there are different operations we are identified here. So in the company, there are different departments are working. So for example, if the related for the purchase department, so they are preparing for purchase budget. Production department, they are preparing for the production budget, and sales department, like this sales related budget they are preparing. So everything which is completely depending on the monetary aspect here. So it is quantify plan for future activities. So before taking any action, so we are not doing any text. Okay, we are not doing any testing. Okay, so whatever we are trying to go for budgeting, so keeping in view in future what object you want to achieve. So how much suppose the budget which is related to production, so unless the overproduction also very danger, underproduction also very danger. So obviously based on the sales, so which is starting from the sales budget, the sales budget will be coordinating with the different budget. Okay, so different department. Quantitative blueprint for the action. Quantitative means which is a measurable. Okay, so either we are talking related to labor cost or material cost. Thus there is a separate budget. So altogether we can say it is a master budget. So everything, so very important, the cash budget is very important here. So moving for budgeting. So budgeting is actually which is a continuous basis. Okay, so budget which is an action plan we are taking. So the budgeting, now we are ready to go for implementing using a budgeting. So the meaning, it means coordinating the combined intelligence of an entire organization into plan of action based on the past performance and governed by the rational judgment factor that will influence the course of business in the future. So before taking any proper plan, of course we need to depend on the historical data. So the past performance we are referring, so whenever you're preparing, so for example in the last month I have prepared in the production department, they targeted for 5,000 units producing, so which is a one kind of information is providing for the second time when they are preparing for the second time, so they want to refer here. So of course which is completely focusing on the future. Okay, so next there is standard definition is given by according to Chartered Institute Management Accountant, Chartered Institute Management Accountant, UK, London. A budget is a plan quantified in the monetary terms, prepare and approve prior to define the period of time. Okay, usually showing the plan income to generate and expenditure is incurred during the period and the capital of employed to attain a given objective. That means very simple. So what and all the input are connected, either which is related to expenditure based material, okay, and the labor cost, how much you are expecting a income, so which is one kind of action plan we are preparing. So obviously we need to give a prior year, so based on the time, okay, for example 1 year budget, even the government also doing for the 5 years budget. Okay, so economical plan they are doing to develop the activity. So obviously in the business majorly we are talking related to capital. The capital employed means as a business owner they are invested money, how they want to use properly, okay, how they want to allocate, what is the cost factor, how much they can generate, how many units they are producing, how you are allocating for the individual department. So everything detailed informations we will get to know at the time of preparing a budget. Now there is one more definition here. G.A. Wells state a budget is a written plan covering projected activity of a firm for definite time period. So which is obviously we are preparing in future, we are trying to take any action. Now forecasting, okay, the forecasting anticipations will be done, okay, either which is related to sales, demand, or flexible budget, or talking related to the production budget. So what is the capacities are available, how much you can expect, so everything will be predicting. Now moving to the budgetary control. Now according to your syllabus, so it is very clearly specified budgetary control. So under budgetary control, there are different departments are working, they are preparing. So which is one kind of control. So what kind of control will be majorly happening here, which is related to the monetary control. Okay, a budgetary control is method of managing cost. So cost which is related to money, right? So which is a capital. So we are not wasting, we don't want to waste, means of course you before taking any action you need to prepare a proper budget. So through the preparation of budgets, okay, just now I told in the company not only single departments are working, there are multiple departments are working. Each and every department, top level management, they are setting a responsibility, okay, even they have a objective to fulfill. So the budgeting is those only a part of budgetary control, which is coming under. So how we are talking related human body, human beings means completely budgetary. In this concept, I'm just taking an example. So budget, which is coming under the budgetary control. So obviously, according to CIMA, budgetary control is the establishment of budget related to responsibility of executive of a policy and the continuous comparisons of actual with the budgeted result. So in coming session, you will get to know there is something the management are setting a standard. So always comparing with the actual, right? So here also budgeted how much actual performance, budgeted result. So we are comparing with the budgeted result with the actual. So obviously when you're preparing a budgetary control, okay, budget, so obviously definitely there is a chances of getting a more result here, either to secure by individual action the objective of the policy to provide basis for its revision. So in case adoptions of budget technique is very difficult, means obviously there is the employees are raising a voice, so we don't want to bother about the employee voice, whatever. So the company, based on the standard, based on the policy, the budgetary are taking a precautionary actions to avoid unnecessary cost here. So that's what the budget, when you're talking related to the master budget, which is overall budget, what and all, either which is sales or production, purchase, okay, different budget. And the objective of budgetary control. The first one, define the objective of the enterprise. Define the objective of the enterprise. Objective which is related to maximizing the profit, objective related to the minimizing cost, the objective related to expand, objective related to optimal use of the resource. So maybe your objective should be very clear. And next one, the providing plan to achieving a objective. So once you set for objective, every department are equally responsible for their respected objective fulfillment. Production department, so we know the production manager or responsibility. So according to the production activity, the production managers, they are preparing a budget. So how much they want to produce, what and all the input resources required. So what is the capacity of machine, so everything. So they based on the objective only, so the budget will work. So now coordinating activity of various departments. So now if you're talking related to the sales department, when they are preparing a sales budget, so they need to communicate, they need to coordinate with the other department like purchase department, production department, R&D department, finance department, everywhere they want to communicate. So because blindly they cannot prepare the budget. So if the sales manager or predicted the forecasted which is related to the demand, so obviously the message has to convey to the productions department. So then only the productions department, they start taking any steps to go for producing. Now operating various department and the cost control economically and efficiently. This is very important for those who are preparing a budget. So you want to minimize your cost, then only you can maximize your profit. So the efficient work, the standard performance what you are setting, so you are trying to compare with the actual performance, okay, how much you are expected, the budgeted. If there is any change is required, obviously we can do for the change. And the next essential requirement of budgetary control, what and all is very important here. The first one, continuous improvement. So why you are preparing budget? Because essential requirement of budgetary control. So the budgetary control, which is a technique or tool adopted by the management to monitor the performance. They want to monitor the performance. Obviously there is a continuous improvement. So for this year you are preparing this budget, if it is up to the standard result are provided, next time you are trying to refer that trend. So there is a improvement you are finding here. And the performance evaluation, majorly we are talking related to the actual performance as well as you are comparing with the budgeted performance. The budgeted performance means what? The performance which is based on the statement only, we are setting a responsibility duty to the individual persons or line managers. So flexibility and adaptability. Of course, if there is a lot of changes are there, means for example, if the management are decided to produce 10,000 units, which is standard set by the management. So either it can be a 9,000 units or 11,000 units, so which is coming under the flexible year. So there is a chances, and even the adaptability. So if the company want to adapt the budgeting technique or budgetary control tool, so there is a lot. The next, monitoring and control is very easy. That's what we are preparing a budget. So unnecessary, if you take any steps, your resource will be completely wasting. To avoid the wastage, so we are preparing the budget so that we can monitor and control wherever necessary. And next one, participate and accountability. When you're preparing a budget, obviously which is participated, coordinated with the different departments, so the communications process will be very easy. So we will get complete track of the transaction operated involved, okay, the activity basis also we can identify. So the complete accountability we will get to know. And the next one, effective communication. Just now I told even the sales department equally they want to communicate with the purchase department, productions department, other department. So the communications process. If you have a data, easily you can communicate. Next one, the management support. So the management, whenever preparing the budget, so obviously they can predict or forecast or anticipated what kind of activity is going on, how much cost is incurred, how much profit I can expect. So obviously the management at the time of taking a decisions are going a plan. So the budget is very important. And next one, budget preparation. So obviously we are preparing respected budget based on their respected activity. Now if you're talking related to the production department, they are preparing a production related budget. So budget preparation, so we need to consider the major expenditures like variable cost, fixed cost, okay, so what and all which is called like related to the preparation of budget. Last one, clear object. Once you are not clear about your objective, so the budget what you're preparing which is not giving accurate result, so be clear your objective, why you're preparing for this budget. Moving forward, so the advantages of budgetary control, there is a lot of advantages also we are getting here. The first one, goal alignment. So once you are setting a goal, according to the goal you need to carry your activity. Obviously the goal setting is very important. Under budgetary control help to align financial activity of the organization with a overall goal and objective. Suppose in 1 year if you want to earn for, you're expecting a sales 360 crores, so each day which is divided by number of days working, okay, now each day you have to reach your target like 1 crores, then only you get a contribution. So short term goal or short term objective or long term goal or long term objective, so which is set by the management. The planning and coordination is very useful here at the time of preparing a budget. So the budgetary control required to a comprehensive plan process that force the managers to analyze and forecast their department needs. What exactly the production department they are expecting, even the sales department what they are expecting, how much they are expecting, so how they are completing their task within a frame time. So obviously which is completely going based on the plan. So you know the management first functions will go start from the planning, end with control. So next one, the performance evaluation. The majorly when we are talking related to standard performance and actual performance according to the budgetary, so you can predict properly here. So the budgetary control provide framework of evaluating. We need to evaluate according to budget your, okay, so the performance of individual, the department wise and the organization are whole, okay, so entire the performance is very important. Now the production department, the performance is not up to the standard, of course, which is affecting for the other department or sales department, so they are not fulfilling their requirement. Resource allocation. At the time of preparing a budget, the complete resource what and all involved in the overall, okay, so to achieve a objective, so the what and all the resources are allocated. The budgetary control help to optimum allocation of finance resource. Okay, so we are talking the budget means we are talking related only for the monetary financial aspect. So it provides the basic of prioritizing expenditure and making informed decisions about the resource allocation. So the properly we can try to utilize what and all the available resources there. So according to the resource we are trying to go for planning. And the next one, cost control is very important. So for that reason only the budgetary is very preparing. So the budgetary control is the main focusing for the cost control here. So the budgetary control help to controlling the cost by setting a expenditure limit and monitoring the actual spending. So each and every transaction or expense are noted or accountability are maintaining just for avoiding unnecessary waste, okay, unnecessary cost. And the decision making, of course the budgetary is a tool, right, technique we are adapting to control, okay. So the budgetary control provide main manager with the accurate and timely financial information that support the decision making for the top level manager or line manager. So we are not taking any blind decisions here. According to the budgetary only we need to work why you are preparing for the budgetary to take a proper decisions or proper planning, okay. Moving forward, for the disadvantages of the budgetary control, obviously there is a too many drawbacks we are finding here. Rigidity is in the sense we are forcing to prepare, we are forcing to implement the budgetary. Sometimes the employees are also not accepting. So here, once the budget is set, it may be a difficult to make any change or adapt for unexpected circumstance. So once you preparing the budget, according to the budget only it is working. So unless if there is any changes is required, so it is not possible according to what type of your budget you are preparing. And next one, time. Of course, the time consuming. So before starting any action, you are preparing with the help of budget statement. So once you completed the budget statement, then you are trying to take an action. So there is a lot of time consumption we are finding. So the process of budgetary control required to significant amount of time and effort. So here, at the time of preparing any budget, the relevant information, so what and all is expecting, you are not getting, means obviously, which is leading to the negative result. Next, to overemphasize a financial target. So the budgetary control system often focus primarily on the financial target and measure. Everything which is related to the monetary aspects, so which is overemphasizing, only targeting for the non-financial activity we won't consider. So which may neglect other important non-financial aspect like quality or performance. Next one, inaccurate assumption. So we will accurate assumption, and tomorrow the what is the market price when you are not able to predict, so which is leading to the negative result. So obviously which is giving a inaccurate result here. So the budget are based on the assumption and forecast which may not always accurately reflect the future operating environmental, because everything in the environmentals from the external source only we are expecting a raw materials. The raw material cost is very important, the labor cost, how we are charging, so what is the government rules and regulations they are bringing. So obviously we need to accept and move forward. So here, gaming and padding. So in some cases, the manager may manipulate the budgetary control system to achieve favorable result. Everybody is expecting a favorable result. So when you are expecting a favorable result, if there is any modification is required, so we can't modify, because based on the accurate result only we are preparing. Expenditures and the future period. So next one, lack of employee buy-in. So if employee do not understand how buy-in into the budgetary control process, they may pursue its top level imposition. So if they are not able to understand, if they are not able to adapt, if they don't know anything about to prepare the budget, so what is the motto, what is an objective, so it is very, very important. Keep on watch for next section. Thank you.